Real sustainable wealth is often built on companies so ingrained in our lives that we barely notice them. These giants quietly dominate their industries, churning out cash and rewarding shareholders year after year. In this video, I'll show you 3 no-brainer dividend stocks to buy right now. A global food and beverage titan, a real estate powerhouse, and an energy infrastructure giant. These aren't speculative plays, they're foundational assets built for stability, long-term growth, and a proven history of increasing dividends. Hit the like button and subscribe so you don't miss the next important financial investing update. Let's start with PepsiCo, ticker symbol PEP, a company whose true investment power is often underestimated. While many people immediately think of soda, PepsiCo is so much more than just a soft drink company. It's a global powerhouse that has quietly become one of the most influential players in the entire consumer staples sector. PepsiCo isn't just about soda, it's a global empire with brands like Lay's, Doritos, Cheetos, and Quaker Oats. Their reach extends into nearly every aisle of the grocery store, from salty snacks to breakfast foods, sports drinks, juices, and even sparkling water. This incredible brand portfolio means PepsiCo is woven into the daily lives of billions of people around the world. Walk into any store, and you'll see PepsiCo products everywhere. Their control over shelf space is a massive competitive advantage. Retailers want their products because they drive traffic and sales, and consumers reach for them out of habit and trust. This dominance isn't accidental. It's the result of decades of strategic brand building and relentless execution. This brand recognition forms a moat, protecting profits from competitors. When you have brands that people know and love, it's incredibly hard for new entrants to steal market share. PepsiCo's products are often the default choice, making them a staple in households across the globe. PepsiCo's distribution network is a logistical masterpiece, allowing them to adapt to local tastes and maintain dominance in over 200 countries. Their ability to get products onto shelves quickly and efficiently, no matter where in the world, is a key reason for their sustained success. This global reach also means they're not overly reliant on any single market. What sets PepsiCo apart is its ability to evolve. They're not just sitting on legacy brands, they're innovating, acquiring and leading new trends, especially in healthier options. Their research and development teams are constantly experimenting, ensuring PepsiCo stays ahead of changing consumer preferences, whether that's plant-based snacks, low-sugar beverages, or sustainable packaging. This adaptability keeps them relevant and growing. PepsiCo's willingness to reinvent itself means it appeals to both longtime fans and new generations. Their brands have become timeless, evolving with the culture while maintaining their core appeal. Now the dividend. PepsiCo is a dividend king, having raised its dividend for over 50 consecutive years. This is a rare achievement, signaling not just stability, but a deep commitment to rewarding shareholders through thick and thin. That's a powerful testament to their financial strength and commitment to shareholders. Few companies can match this track record, and it's a sign that PepsiCo's management prioritizes long-term value creation. When you invest in PepsiCo, you're buying a share of a global diversified consumer staples giant with an unwavering commitment to returning capital to shareholders. This means you benefit from both the company's growth and its steady stream of dividends, making it a powerful wealth-building tool. The business is resilient. Even in downturns, people still buy snacks and drinks. In fact, during tough times, affordable treats like chips and sodas often become small comforts, keeping sales steady when other industries struggle. PepsiCo's steady revenue stream fuels a reliable, growing dividend. This consistency is what makes it so attractive for income-focused investors who want to see their money work for them year after year. The real magic is in dividend growth. Your income increases over time, and reinvesting dividends accelerates your portfolio's growth. Compounding works in your favor, turning even modest investments into significant wealth over decades. PepsiCo generates massive, predictable free cash flow, supporting dividends, buybacks, and reinvestment. This financial engine gives them the flexibility to weather storms, invest in new opportunities, and reward shareholders. Emerging markets and the global wellness trend offer huge growth opportunities. As more people around the world join the middle class, demand for convenient, trusted brands like PepsiCo's only increases. PepsiCo is embracing health trends, not fighting them, positioning itself for the future. Their investments in better-for-you products and sustainability initiatives show they're thinking long-term, not just about the next quarter. In summary, iconic brands, unmatched distribution, adaptability, financial strength, and an incredible dividend history make PepsiCo a quintessential blue-chip dividend stock. It's a company that has proven it can thrive in any environment. It's not a get-rich-quick stock. It's a foundation for sustainable generational wealth. This is the kind of investment you can pass down, knowing it will continue to deliver value for decades. PepsiCo currently carries a market capitalization of about $197.94 billion, trading at a price-to-earnings ratio of roughly 27.49, with earnings per share of $5.26. In 20,000 satsu, in 2024, PepsiCo generated revenue of approximately $91.85 billion and delivered net income of about $9.57 billion. Its forward dividend and yield is 3.994%. What stands out here is the company's ability to consistently convert massive global demand for its food and beverage portfolio into reliable earnings, making it a classic example of a defensive stock that can perform well even during economic slowdowns. For investors seeking reliable income and a nearly unbreachable moat, PepsiCo is a no-brainer. Its fortress-like business model and global scale make it a core holding for any serious long-term investor. It's a cornerstone investment you can hold through any market cycle. Whether the economy is booming or facing headwinds, PepsiCo's business endures and continues to reward patient shareholders. In a world of uncertainty, PepsiCo's predictability is incredibly valuable. Knowing you own a piece of a company that has weathered every storm gives you peace of mind. They've navigated inflation, recessions, and global crises, all while growing their business and dividend. This resilience is rare, and it's what sets PepsiCo apart from so many other companies. That's the kind of reliability that lets you sleep well at night. You don't have to worry about wild swings or sudden surprises, just steady compounding returns. PepsiCo, a true set-it-and-forget-it investment. For those who want to build wealth quietly, steadily, and with confidence, it's hard to find a better choice. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Next up is Realty Income, ticker symbol O, widely known as the monthly dividend company. This company has become a household name among income investors, and for good reason. Realty Income has built a reputation for reliability, consistency, and a unique approach to real estate investing that sets it apart from the crowd. Realty Income is a real estate investment trust, or REIT, specializing in single-tenant freestanding properties. These properties are leased to high-quality, recession-resistant businesses like Walgreens, 7-Eleven, Dollar General, and FedEx. These are companies that people rely on for everyday essentials, no matter what's happening in the broader economy. Their tenants provide essential goods and services. Think groceries, medicine, shipping, and convenience items. This focus on necessity-based retail means Realty Income's cash flow remains resilient, even during economic downturns or periods of uncertainty. When people need to buy food, pick up prescriptions, or ship packages, they're visiting Realty Income's tenants. What really sets Realty Income apart is its use of triple net leases. In these agreements, tenants are responsible for paying not just rent, but also property taxes, insurance, and maintenance costs. This structure shifts much of the risk and expense away from Realty Income, creating highly predictable and stable income streams for shareholders. The lease terms are long, often stretching 10 to 20 years, and they typically include built-in rent escalators. This means Realty Income can count on steady, growing rental income for years to come, providing fantastic visibility into future cash flows and making it easier to plan for growth and dividend increases. Today, Realty Income owns over 15,000 properties, spread across all 50 states and several countries in Europe. This massive geographic footprint helps diversify risk, so no single tenant, industry, or region can make or break the company. It's a portfolio built for strength and stability. Their scale gives them a powerful competitive edge. With so many properties and such a strong reputation, Realty Income can acquire new assets at attractive prices and access capital at lower costs than smaller competitors. This allows them to keep expanding and improving their portfolio, which ultimately benefits shareholders. Perhaps the most impressive statistic, Realty Income has paid over 640 consecutive monthly dividends. That's more than 53 years of uninterrupted monthly income. Even more, they've increased their dividend for more than 100 consecutive quarters, including during recessions and global crises. This level of consistency is almost unheard of in the stock market. When you invest in Realty Income, you're buying a slice of a vast, diversified, and high-quality real estate portfolio. It's designed from the ground up to deliver steady, growing monthly income, making it a favorite for those who value predictability and peace of mind. The monthly dividend is a huge draw, especially for retirees or anyone seeking regular, reliable income. Instead of waiting for quarterly payouts, Realty Income shareholders get paid every single month, which can make budgeting and financial planning much easier. The business model is refreshingly simple. Acquire great properties, lease them to reliable tenants, and distribute the rental income to shareholders. This straightforward approach has stood the test of time and continues to deliver results. Realty Income's portfolio is also strategically positioned to withstand the rise of e-commerce. By focusing on service-oriented and essential businesses like pharmacies, convenience stores, and shipping centers, they've insulated themselves from the threat of online retail disruption. These are businesses that can't be easily replaced by an app or a website. In recent years, Realty Income has also diversified into industrial and gaming properties, expanding beyond traditional retail. This move ensures long-term relevance and opens up new avenues for growth as the economy and consumer habits continue to evolve. They're also smart capital recyclers, selling off less desirable assets and reinvesting the proceeds into higher quality opportunities. This active management helps keep the portfolio fresh and focused on the best possible returns. Realty Income's dividend yield is among the most attractive in the large cap space, and the income has a long track record of growing faster than inflation. This means your purchasing power is protected, and your income stream can actually improve over time. The company has a market capitalization of around $55.76 billion and trades at a price-to-earnings ratio of about 56.77, with earnings per share of $1.07. In 2024, Realty Income posted revenue of roughly $5.27 billion and net income of about $847.89 million. Its forward dividend and yield is 5.33%. Known for its monthly dividend model and long-term lease structure, Realty Income is designed to prioritize stability and predictable cash flows, which explains why investors are often willing to pay a premium valuation for its consistency and income reliability. For income-focused investors, Realty Income is about as close to a bond alternative as you'll find in the stock market. But unlike most bonds, Realty Income's payouts have the potential to grow, offering both stability and upside. To recap, Realty Income offers thousands of high-quality properties, leases to creditworthy tenants, locks in long-term agreements, and delivers a reliable, growing monthly dividend. It's a combination that's hard to beat for anyone seeking steady income. Realty Income is a true leader in its industry, built on a foundation of stability, predictability, and a shareholder-friendly ethos. Their commitment to transparency and disciplined growth has earned them the trust of millions of investors worldwide. For anyone seeking passive monthly income, whether you're just starting out or enjoying retirement, Realty Income is a foundational holding that can anchor your portfolio for the long haul. It truly lives up to its nickname, the Monthly Dividend Company, earning that title through decades of consistent performance, prudent management, and a relentless focus on shareholder value. So, which of these three dividend stocks do you believe has the strongest long-term advantage? Share your thoughts in the comments below. I'd love to hear your perspective and continue the conversation. Our final pick is Enterprise Products Partners, ticker symbol EPD, a stable, cash-generating energy infrastructure giant that has quietly become a backbone of the North American energy sector. While it may not make headlines like some tech stocks, EPD's importance to the energy supply chain cannot be overstated. EPD owns and operates a vast network of pipelines, storage facilities, and export terminals, the essential plumbing of North American energy. These assets stretch across the continent, moving massive volumes of oil, natural gas, and natural gas liquids every single day. Unlike exploration and production companies, EPD doesn't drill for oil or gas. Instead, they get paid to transport, store, and process it. This means their business is less exposed to the wild swings in commodity prices that can rattle the sector. Their toll booth business model means revenue is based on volume, not commodity prices, creating stable, predictable cash flow. Whether oil prices are high or low, as long as energy keeps moving, EPD keeps earning. EPD owns over 50,000 miles of pipelines, enough to circle the Earth twice, connecting key supply basins with major demand centers. This extensive reach allows them to serve a wide range of customers, from producers to refiners to exporters. This integrated network is a massive competitive advantage, offering customers a full suite of midstream services. EPD can move, store, and process energy products efficiently, making them a one-stop shop for the industry's logistical needs. Building a competing network today would be nearly impossible due to cost and regulation. The barriers to entry are sky-high, and EPD's established footprint is virtually irreplaceable, giving them a durable moat against new competition. As a master limited partnership, EPD pays out distributions instead of dividends, with 25 consecutive years of increases. This track record of consistent growing payouts is a testament to their disciplined approach and commitment to unit holders. Their conservative management and strong balance sheet ensure the sustainability of payouts, even during tough times. EPD's leadership is known for prudent capital allocation and a focus on long-term stability over short-term gains. EPD's distribution yield is typically high, often 6 to 8%, making it attractive for income-focused investors. In a world where reliable yield is hard to find, EPD stands out as a rare source of steady, tax-advantaged income. The K-1 tax form adds some complexity, but the high tax-advantaged yield is worth it for many. For those willing to handle a bit of extra paperwork, the after-tax returns can be especially appealing compared to traditional dividends. EPD is well positioned for the future, as oil and gas remain critical to the global energy mix for decades. Even as renewables grow, the world's demand for reliable, affordable energy ensures EPD's assets will stay in high demand. Their export terminals connect abundant North American supply with growing global demand. As the U.S. becomes a major energy exporter, EPD's infrastructure is essential for moving products to international markets. EPD is also exploring lower carbon technologies like carbon capture and hydrogen, ensuring long-term relevance. By investing in these innovations, they're preparing to play a key role in the evolving energy landscape. Investing in EPD means owning indispensable infrastructure that powers the economy, with a generous, reliable income stream. It's a way to participate in the energy sector's growth without taking on the risks of commodity speculation. It's a business focused on steady, predictable cash generation, not speculation. EPD's revenues are underpinned by long-term contracts and fee-based agreements, providing visibility and confidence for investors. The company has a market capitalization of approximately $71.54 billion and trades at a price-to-earnings ratio of around 12.52, with earnings per share of $2.64. In 2024, Enterprise Products Partners generated revenue of about $56.21 billion and reported net income of roughly $5.84 billion. Its forward dividend and yield is 6.58%. What makes this business attractive is its fee-based, midstream model, which helps reduce direct exposure to commodity price swings while still benefiting from long-term demand for energy transportation and storage. The combination of high yield, distribution growth, a strong balance sheet, and a critical role in energy makes EPD a compelling choice. Few companies can match this blend of income stability and strategic importance. You get energy sector stability without commodity price volatility. EPD's business model is designed to weather economic cycles, providing peace of mind for long-term investors. Their conservative approach provides a margin of safety often lacking in the sector. By avoiding excessive leverage and focusing on core operations, EPD reduces risk for its unit holders. EPD consistently rewards unit holders and maintains financial strength. Their commitment to financial discipline has helped them navigate downturns and emerge even stronger. In summary, EPD offers high income and steady growth, backed by world-class infrastructure assets. It's a rare combination that appeals to both conservative and growth-oriented investors. For those willing to handle the K-1, it's one of the best total return opportunities in the dividend space. The combination of yield, growth, and tax advantages is hard to beat. EPD is a true toll booth business that keeps collecting cash for its owners, year after year, making it a cornerstone holding for anyone seeking reliable, long-term income from the energy sector. There you have it, three powerhouse companies that form the bedrock of a solid dividend growth portfolio. PepsiCo, the king of snacks and beverages, Realty Income, the monthly dividend company, and Enterprise Products Partners, the essential toll booth of American energy. These aren't headline grabbers, but they can quietly and consistently build your wealth over time. Focus on businesses with wide moats, resilient cash flows, and a proven commitment to shareholders to build a portfolio that works for you. Do your own research, but consider how adding assets like these could bring stability and predictable income to your financial future. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Like, comment, and subscribe for more investing updates. Thanks for watching.